Good morning. This is Larry McMillan with the stock market update on Monday, August 4th. So we saw a little selling in the market last week. It got a little bit serious on Friday, but the market is bouncing back today. So we have support now, doubly tested right around 6,200. That would be Friday's low, and then the low from a couple of weeks ago. But we also did get some confirmed sell signals with last week's deterioration in some of the internal indicators. Specifically, we had actually three sell signals. One was the McMillan volatility band sell signal, so the market had moved outside of what was considered an overbought band and then back inside, so that's a sell signal. Breadth had deteriorated badly, and that's on a sell signal as well. It's already moved so fast, breadth has moved so fast that it's in oversold territory, but it's still on a sell signal. And then finally, we had the equity-only put-call ratio sell signals, which we mentioned last week. The SPX chart, though, does have that support at 6,200, and there's further support down to 6,050 or so. I would think if we went below 6150, though, which was the old highs in February, that would be a problem. So right now, the support 6150 to 6200 is important. And if that gets broken, then I think more selling will come into the market pretty heavily. As I said, the put-call ratios are negative. Breadth is negative. The new highs versus new lows is still holding on to its buy signal, though. New lows did outnumber new highs on the New York Stock Exchange on Friday, but that's reversing back again today. So that indicator remains positive. VIX jumped up above 21 on Friday, and that set off some alarms, but it really didn't change things a whole lot. And now VIX is declining. So we're about on the verge of a new VIX spike peak buy signal. As you know, those are relatively frequent. We get many in a year, maybe as many as 10 or so. So that this will be a new spike peak buy signal if VIX closes below 1890 today or any coming day. And that looks like that's going to happen. So there will be a new buy signal in the mix as well. The construct of volatility derivatives retained a bullish stance even through Friday selling, and into today, the term structures of the VIX futures continue to slope upwards. So overall, we still have a positive SPX chart, and we still have some positive indicators, but we have had these new sell signals now. So we're trading all of these. We have specific stops and targets for these various signals, and they're all well back tested. So we'll see how this works out, but right now it looks like the market is perhaps thinking about correcting. The news on tariffs and interest rates is dominant, of course, but the technical indicators are still saying that the SPX chart is bullish, and I think that's the number one thing you want to keep in mind right now. If you'd like to visit our website and take a look at some of our newsletters, you can keep up to date with these indicators on a more timely basis. And meanwhile, have a great week trading.